Welcome to the Sykes and Company PA video blog featuring Ollin Sykes. Good morning, Ollin.
Good morning, Rachel. How are you today?
I'm good. How are you?
Doing fine, thanks.
So we're getting close to the end of the year, and then, of course, looking ahead to taxes. I'm wondering if today we could talk about how to know that you're on track with your accountant for non-extension taxes. That when it comes April, you're not going to be filing for an extension. If I'm an independent pharmacy owner, what do I need to be looking for now, months ahead of time?
Well, typically in the fourth quarter of a calendar year, with most pharmacies having a calendar year as the year end, um, they obviously by now should know where they stand year to date, have a good feel on what the remaining few weeks or months of the year will look like, and be able to make some guesstimates of what those numbers may be. Also, if there are S corporations, as many pharmacies are, with the being passed through entities, then um, beginning to take that information that's available from the pharmacies and merging that with their personal information to do some year-end personal tax planning makes a lot of sense at this point in time, so that you don't get surprises in February, March, April, or thereafter. Um, we like to say that it's very important to do that at this point in time, so that you know what cash flow that is needed. Let's say late December, because a lot of times there are payments one kind or another that are needed in December or January, and then possibly March or April, depending on the type of entity. But just knowing where they stand is just extraordinarily important to be able to plan, so that you're not getting shocked with those calls from the your CPA saying you owe X dollars, on April 15th. Those are not fun calls to make, I can tell you.
I bet, and not fun calls to receive.
Absolutely.
So, looking at December, January, in terms of tax planning, when is it too late to have made a difference in my taxes for this year?
Well, it's not too late until you go beyond December 31st, assuming you're a calendar year in. Now, that said, you need to know what your inventory levels are. If you haven't already done an actual inventory for the year, we encourage most of our pharmacies to take inventories prior to December 31st, so we can make those adjustments and know what those adjustments are, prior to year end, and do that planning that I just mentioned. Because if you wait and do it, December 31st or sometime in January or February, and back it up until 12/31, which you can do that, you don't really know, and you don't really have the operational numbers that you need to make these guesstimates with respect to your earnings and your cash flow needs and requirements for that period of time. So that making sure your fixed asset situation is under control. You've got certain very, very beneficial depreciation Section 179 guidelines that are in place this year that go out of the window next year to a great degree. And I know there's a lot of pharmacies looking to upgrade their computers, because Windows XP, of course, goes essentially dormant next spring. So any of those pharmacies that have any Windows XP systems need to be replacing those now versus later. You can always take a look at robots and automating the pharmacies to get the bang for the buck from the taxes from that perspective. But economically, you just need to look at what it is you need in your pharmacy, and make the best economic decisions first and foremost, and then the tax issues come secondary. But don't ever let the tax tail wag the dog, as the saying goes. You need to economically make sure you're making the best decisions with the cash and debt levels that you are comfortable with.
Assuming that someone is in a position to make those kinds of decisions, maybe they have a little extra and they're looking for some tax benefit, what are the changes 2013 to 2014 that people need to be aware of?
Well, I just had mentioned the simple largest one would be that Section 179. It goes for $500,000 this year to schedule 25,000 for next year. So, most pharmacies are not spending anywhere near $500,000 a year per pharmacy for fixed asset addition. So, in theory, most of the robots that we see are 100,000 to 200,000, in that range. So in theory, you could pretty much replace all the fixed assets or computer or technology equipment that you had in your pharmacy, and be able to write it off all at one time and get the tax benefit now, versus waiting for future time periods to unfold. But That would be the single largest issue that really uh, is changed dramatically as we go into 2014. There are others that are more subtle. There are other issues that increase tax rates suddenly this year versus prior years. And in fact, I was at a tax conference recently, and we discussed that really with all the various tax adjustments this year versus last year, 12, in some cases the tax rates are 9.5% higher than they were last year for a maximum taxpayer, and that's not advertised. That's not something you see in the press. That's something that's reality, though, with all the phase outs, with the Medicaid tax, Medicare tax, all those, the 3.8% Obamacare tax, all those kinds of things that come into play. Those things add up pretty dramatically, and you just need to know what and how that's going to impact you um, sooner rather than later.
That makes a lot of sense.
Yeah.
We also talked, going into this session about no extension taxes. So can you tell us a little bit about what can cause people to go on extension and how to prevent that?
Well, what we see as causing pharmacies to go on extension is they just simply don't have a handle on where they are. Uh, they wait maybe until February to start working on the previous year end. Uh, uh, I'm actually working on a pharmacy right now that does about $12 million in volume that had not a clue where they stood at all for the entire year. And it took us about a month to get caught up for the current year. But if you wait until February to start doing that, and you do an inventory after the fact, you don't have a clue where you stand. You don't have a clue what monies you may owe. You don't have a clue what you can do on a proactive basis to mitigate that taxation. So again, it's just a matter of fundamentally knowing where you stand first and foremost, so that you're managing the business and not letting the business of the pharmacy manage itself. So that's the key thing that needs to be looked at.
Thank you for joining us today. If you want more information or if you have questions, please feel free to contact Ollin directly.